Are you looking to invest in real estate in Belgium? You're exploring the potential for a first real estate investment, or you already made one or more investments, but you're wondering what it takes to be successful with real estate, how to find good deals, what are the strategies that improve investment returns, and what are the key elements that you need to pay attention to when you're investing for the first time. This is exactly what we discuss in this episode of the Fire Belgium show with Joris Van Briel. Joris is part of the FIRE community and a real estate investor in Belgium. He's 32 years old and already owns 4 investment units in Antwerp and is looking to invest in Brussels. He started at 26, and with the combination of luck, good financing, and smart strategies, also known as house hacking, and of course, a lot of hard work, he actually managed to get investment returns of 60% in the first year. That's insane. I didn't know this when we started the conversation. This is something I discovered gradually when we were speaking. And while, yes, there was some luck involved, we also uncovered many important strategies that you can replicate to improve your investment returns. As I am not an investor in real estate myself, I certainly learned a ton from this conversation. And so, a big thank you to Joris. If you want to connect and learn more from Joris, I recommend you check out his website and his YouTube channel, The Money Network. The links are in the description. Hi, I am Sebastian Aguilar. I am the founder of Fire Belgium, a community of more than 8,500 people today who are learning and improving their personal finance. I have been investing in the stock market since 2012 and teaching how to do it in a simple and effective way since 2015. I have a portfolio of over 1 million euros built only through simple saving from my job until I quit in 2018 and investing in index funds. Nothing else, just simple saving and investing. Today, I share my knowledge and explore new knowledge through this podcast to help you take control of your finances and invest better so that you can live more and give more. If you're interested in learning more about simple and effective stock market investing, which is not the topic of this podcast, I recommend you check out the workshop on the Fire Belgium website at firebelgium.com/investing workshop. It's free and it will help you get started in the best way possible. Welcome to the Fire Belgium show. All right, everyone, welcome to this session on how to invest in real estate and how to be successful with your first investment in real estate. And to help me answer this question today, I have with me Joris Van Briel, and that is mostly because I don't know anything about real estate. I am myself not a real estate investor. I don't even own my house. I am financially independent, but I don't own my house. I rent and I'm happy. But certainly I know that the community has a big need for better understanding on this topic because it's something that is important to many of you, many of us, and it's an important alternative to investing in the stock market because it can be part of a really good, well-diversified portfolio. And certainly for that, I need external experts, and Joris is certainly one of them. And so, Joris, with that, welcome to the Fire Belgium show.
Thank you for having me.
So, Joris, let's dive right in. Maybe we start with a bit of your experience in real estate, and if you could tell people who are listening and people who are attending today live, why did I invite you, and why are you, someone we should listen to? What's your experience in real estate?
All right, setting the bar from the first minute. Hello, everyone. So yes, Sebastian and I have been in contact a few times already during the last few years. And while Sebastian is investing in the stock market, I am also investing in the stock market, but also a very big advocate for real estate investing. I'm 32 years of age, and for now, I have several apartments in the center of Antwerp, 2000 Antwerp, all in the city center, where I started my real estate journey 6 years ago by now. And I recently, 2 years ago, I bought my 4th apartment. I'm now looking for the 5th. So hopefully that does already give me enough credibility to start talking about real estate. So we'll have to see, and I'll have to try to teach you more about the basics of
And
real estate.
you also work in the space. You're a consultant for other investors.
Yes, I started my professional career in private banking, and I noticed that a lot of people were extremely wealthy, and most of them due to the fact that they bought real estate in the 70s and the 80s, and value went up, and they sold their properties when they retired. So then they had a lot of money. So I was thinking, well, this is interesting. Then I started investing shortly after. But now, today, I am also a consultant in real estate, doing the financial analysis of buildings. On the one hand, I value buildings. I put a price on them. If you buy or sell a house, sometimes the bank asks you or requires you to have a valuation of the building, so they can hand out a loan accordingly. That's what I do. But also I work with investors to look at their portfolio, to value their portfolio, and to see how their credit lines align with what real estate they have. It's a little bit too far for now.
Awesome. So it's just your experience is yours personally, but also that of other people and clients, other investors, and so that gives you a broader view of all of this. Awesome. Thank you. Thank you so much. Shall we then maybe explain why real estate is interesting and what kind of real estate we could consider?
Yeah, sure. So there's several reasons why people, especially in Belgium, invest in real estate, because it's a very interesting way of investing. When you invest in the stock market, there's very little tax on those in Belgium, but the same goes for real estate. Of course, there are taxes and acquisition costs, but in the long run, especially if you keep your investment real estate or your own house for a longer period of time, these transaction costs, these running costs are pretty low. Also, it's often considered to have a more tangible idea, because you can touch your house, you can see it, while your investments are sometimes a little bit further away online by some clicks, and then still it's just a number on a screen. So people like these kinds of tangible things. And also, history is basically what it is, and the real estate prices have been going up for the last decades, the last centuries, basically in Belgium. And even in the financial crisis in 2008, there was a very slim correction in Belgium, just 16%, if I'm not mistaken. But these kind of fluctuations in Belgium are very limited, because if there's a crash, people are selling. Investments are liquid, while real estate is not liquid, which is can be a plus when there's a downturn in the market. So you're not forced to sell, or you don't have to sell whenever the real estate drops. So you don't even notice the drops in price. That's what I'm trying to say. That's one thing. And then obviously you have the value of your house that is gradually growing. And if you have a rental property, you rent it out, the rent you get every month is every year it grows like a dividend would. It basically indexes every year. Why else real estate? Well, I'm definitely not saying you should not invest in the stock market, because I'm also heavily invested in the stock market. It's basically a diversification. You can also buy stocks on real estate, but we'll come back to that later. But basically, physical real estate is not related to the stock market, so it's a diversification of your money, basically. And also, you have direct control over your assets. You can pick your renters. You can, well, get them out of your property. That's a little bit harder, but you can manage it very, very closely and way better than you would do with your stocks, especially ETFs. So you're very far away from the actual companies at that point in time.
Yeah. I think, real estate historically has been a major interest for almost everyone in Belgium, partly because of its performance, but I think a lot of it because of the culture that we live in,
Yeah.
where it seems like owning is a goal for most people, right? And somehow owning your house, not necessarily owning as an investment and renting it out, but for some reason, owning it is it's like the American dream in the United States. And somehow we have a similar Belgian dream of having to own our house. And so I think that
Yeah,
obviously makes everyone interested in real estate. And so everybody kind of gets understand how it works, because everybody at some point buys a house. So it makes it like it's a commonly understood, at least the bases are commonly understood by most people.
Yeah, exactly. And we have this saying in Belgium. It works in Dutch. I'm not sure if it's known in English, but basically the Belgians have a brick in their stomach,
Yes, this
een
is same.
baksteen in de maag. So we always want to either build or buy. We really want to have the tangible thing, and we were brought up by that. And if I remember the number correctly, around 72-73% of Belgians own their own house or apartments at their own. So yes, it is something that is way higher than for example in the Netherlands, where there's only 30 or 40% that actually own their houses. So Belgium is really way I wouldn't say ahead, but a lot more owners than renters, basically.
Yeah, and I think there's pros and cons in like both kinds of societies, right? There's societies where the number of renters is much higher than the number of homeowners, and it's a different interaction, different dynamics. and within Belgium is what it is here. But certainly, I've heard of positive aspects of having a society where most people are not actually owners but renters. But there are also positive aspects to owning. Certainly, in a country where saving might be difficult, and it seems like owning your house is kind of a forced way of having to save money and having something for retirement on top of the traditional pensions.
Yeah, and I also think my mom is from the west of Belgium, the West Flanders area, and they don't talk about money whatsoever. It's a taboo, completely a taboo. So basically, people don't even go to the stock market because they don't even know what it is.
Mhm.
So buying a house, that's easy. Everyone has a house, so you're the next one to buy a house. Basically, that's the only investment. Well, one of the very few investments that people, especially the older generation, has made, and it's a culture. Hopefully, the culture will change a little bit by that, but it's something that we Belgians are, I'm afraid.
Yeah, for sure, for sure. And something else that comes to mind when we speak about this is when you mentioned, the sort of control we have on real estate when we invest, which we typically don't have when we invest in, say, an index ETF, right? It reminds me also of this idea that I have that real estate is sort of a combination of investing with entrepreneurship. Entrepreneurship is basically building a business, right? And investing is mostly, well, especially the way I teach, which is long term, buy and hold, low cost, broadly diversified index funds that you just don't touch anymore. Is like super passive. And real estate is somewhere in between because you need some kind of time and entrepreneurial spirit to find the deal, to finance the deal, find the clients, which are basically tenants, manage the whole property. So it's kind of managing a business for a while. And at the same time, you need some kind of capital and financing that can be quite significant. It's like putting those two together. That's how I see real estate is like it's a combination of two. It's like it's not full on startup business entrepreneurship, but it's something that combines a bit of those skills with combines of investing skills in something that most people understand, which is bricks and a roof.
I agree completely because oftentimes people say, well, real estate investment is passive investment is passive income. And I would disagree to a way because you have your own house, but you also have your investment properties. And for both, you basically have to do extra upkeep. For your own house, it's a little bit easier, but if you do for rental properties, you're gonna have to get in touch with tenants. It's basically running a business. Your own house, not per se, but the second you do rental income, you're basically running a business. And if you run a business badly, then you'll also have a lot of problems renting out the property. Your own house is a little bit different. You are investing, you are kind of investing in bricks that's money you cannot take out anymore because it's in your bricks and you can only get it out when you sell your property. But then where you're going to live, you can rent at that point in time. So that's basically a little bit different. But yes, the idea that it is a business is definitely something you should really keep in mind if you're going to rent out. It's not passive whatsoever.
Mm-hmm. Yeah, that makes sense to me. And I see for people who own their house, it's actually a job too to have the house, maintain it, renovate, change this, change that, mow the lawn and like redo the kitchen, change the tires, whatever, painting and the roof, the insulation, leakage. So there's kind of extra work anyway, even when you own it. Anyway, but this is part of the deal, right? And a lot of
Yeah.
people like dealing with this. And then some just don't, like me. But it's a personal choice, certainly. But I like the fact that also you have more control, right? So that's probably
Mhm.
the number one benefit of index investing is like there's nothing to do. You just buy the entire
Yeah,
market. You know you're gonna do better than most banks, right? Just with that, because it's
true.
proven, right? With real estate, there's work to do to basically find deals that are hard to find otherwise, or that are that could be better than the average, and that's how you outperform. And then there's like the way you manage the business and the deal and how you deal with it later basically is how you create the profit, and so you have a direct impact on the success of the project. So it's very much it's strongly a skill, a competence based approach, which I think to building money. So you have competence. If you have the right mindset, real estate is amazing. You can do way better
Mhm.
than the stock market, I'm sure. I mean, hopefully you'll tell us a bit about your experience and your numbers maybe if you're open to that. But I'm sure there's lots of examples of real estate being far more profitable than index investing, but also with the work and the competence that is required to get there.
Yeah, of course. It is as you say, the less time you spend, the less your return will be. If you treat real estate as a company and you're really actively working on it, then your return will be a lot higher and it will be better than the average on the stock market. But yes, we'll go to the numbers a little bit later. But yes, that's definitely true.
Mhm. Then let's go back to a basic question. What are the different types of real estate investment. I think before even that, are we today speaking about investing in your own house and living in it, or are we talking about more investing in a separate real estate and trying to make profit out of that by renting or flipping or doing something? Which of these two are we mostly covering today?
As you wish, doesn't matter.
Well,
I think the idea was to do the first investment, right? So
yeah, your
I
first
think
investment, but it doesn't necessarily have to be your house. I would say the first investment. We'll see. I guess when it makes sense, it would be good to clearly differentiate. Okay, if it's your house, then this happens, and if it's not your house and you're actually renting, you are renting it out or doing something else with it, then it has maybe different implications. Okay, but then let's go back then to the different types of real estate investment. I think that would be quite good for those who are new to real estate investment. It's good if they have an idea what exists.
yeah, let's take one step back. So you have the difference between buying your own house, buying a house or an apartment to rent out. Buying your own house, you really want to find something that attracts to you. While if you buy something that to rent out, then you want to buy something that attracts to as much people as possible because you need renters. So it's a different strategy as well. But I don't want to go too far into the details of taxes yet. But the first acquisition is always the most important one because you are in every part of Belgium, you are helped for the first acquisition you do. And if you do a very smart acquisition at the first, that then you can make a lot of money because in real estate, money is made in 2 points. The second you buy, so you're basically buying a stock that is undervalued, a building that is undervalued on the market. Of course, the actual value is higher than what it is on the market, and on the very, very long term, because you have quite a lot of entrance fees, I guess. You have to pay taxes, you have to pay your notary, your bank as well, and then you have to wait several years before the capital of the building or the value of the building grows to combat the costs you have put in. But that's basically that. To go for different types of real estate investments, well, if you're buying for yourself, you're going to buy residential. That's quite obvious. But in Belgium, also tax wise, residential is very interesting to buy when you are a private investor. If you are a company, a professional investor, then real estate is less interesting because the rental income will be taxed at that point in time, or at least it's income in your company, and that's taxed. At that point in time, for example, me, I have a business. I'm a freelancer, so I have a lot of money coming into my company as well. For me, I have not done this yet, but I will buy commercial real estate in my company because rental income will be taxed. But then again, you can put costs in that as well, so it evens out a little bit better. The same taxes are lifted on you as a private person, so it's better in a company where you can put costs against these taxes. So you have a residential, which is then a single family house and single family apartment, or the more investment properties where you have a multi-tenant apartment building or a block of two or a house with an extra apartment studio, something like that, something you can combine. And then professionally, you have your little store, an office space, or even an industrial site that can go into multiple millions, of course, but the smaller tickets will be a few 100,000 to start off with. That's basically the biggest difference, really. And if we are, I think we should stick to private investing now. So I think we should just stay into residential. But if there's questions about the professional, we can always go there in the Q&A.
Yeah, here we would want to focus on the first real estate investment as like, beyond just your house. So I think that should be as private person, certainly.
Yeah, then we stick to residential, and then you have your houses and your apartments, where we do see that the return on apartment is always a lot higher than the return on the house, because a house often has a garden, it's way bigger, and the buy ticket is just higher. A villa or a sole standing house is always more expensive than an apartment, and the apartments are most of times on locations where a lot of renters are. In Antwerp, Brussels, and Ghent, the biggest cities for investments, and especially apartments, that's where you want to be. A house is very hard to rent out, and the return on investment is just way lower. As I said earlier, around 70% of Belgians own their house or their unit where they live in. In Antwerp, Brussels, and Ghent, this ratio is down to 40%, 40, 50%, depending on the city. So there's a lot more renters, and people come to the big city. Big city sounds a bit weird, but they go to the city to work, and then they want to live close to their work, and that's why they go there. If you have a house in the middle of West Flanders, there's no one gonna rent it. or they're going to pay very, very little for that. So the return on investment will always be better for the apartments, and that's always more interesting to have an. If we put our first acquisition, our own house on the side, the first acquisition you do to actually make money off of, that should be an apartment. Then to give a very quick idea, if you buy an apartment outright, just say without financing or whatsoever, apartment should have around 3.5 to 4% return on investment from day one, while a house is almost 1% or even 1.5% lower. So we're looking at 2 to 2.5 for the house compared to the apartments.
And this is if you paid cash and you start renting from day one.
Yes.
At the
Yeah.
rates that goes in that area, right?
Yeah, if you buy for 300K and you put all your taxes on top of that, so let's say around 40,000 in taxes, so 340,000 acquisition cost, and then the monthly rent compared to that. So that's quite low. Of course, real estate as is without financing is not interesting, is not comparable to ETFs because it's a lot more work and it's a lot less rewarding. But of course, the financial leverage is where you gain your advantage.
Yeah, I think this is a really important point because, in fact, a lot of real estate isn't leveraged, right? Because people tend to just want to pay it off and then move on. Whereas to me, it seems that from my limited understanding of how to invest in real estate is that if you can optimize leverage, then that's how you generate the most profit per cash invested, right? And obviously, then you leverage certain properties to acquire more properties. So there's also a certain risk aspect to this because leverage can work both ways. But that's how you create higher performance, higher gains, right?
Yes, and the leverage is basically the magic tool. And if it would be possible to do a leverage for stock market investing, it would even be better having a small loan. But basically, what I'm trying to say is you lend money, and nowadays a normal mortgage rate would be around 3.2%. If your return is higher than 3.2%, then you should always lend money because you're using money that is not yours. It has a cost, but you're making more money with that, and the difference of that is basically in the pocket. But also, real estate returns, you can calculate them in many different ways, but basically how I calculate them is basically my return on investment. If I, for example, the same idea of just now, the 340,000, just to put some numbers. If I were to pay, and it gives me 3%, which is around, let's make easy numbers, 10,000 a year. That's 10,000 a year on 340. That's not great. But if I only put down 50,000, then the 10,000 minus mortgage payments would be the return on my investment, which is always a bit higher because that's why you're using the mortgage. On top of that, a lot of my loans were started in 2018, and I was very happy and very lucky to have very low interest rates. I have rates of 1%, even lower, up until 1.8. So that's all pretty low. But in recent years, we saw a huge amount of inflation, 8%, 10%, which basically diminishes or decimates the value of your loan, the value of your money, but also the value of your loan. So if I had 100,000 in loans and there's an inflation of 10%, well, in back in the days, money that would only be 90,000. So 10,000 is just basically gone due to inflation, which is great. And that's why I say you make money in real estate on long term, because you're basically placing a bet against the inflation over a long time.
Yeah, so there's capital appreciation of the house, which also normally follows more or less inflation long term. There's actual inflation that is eroding or reducing the actual burden of debt, and then rental income, which normally tends to also stick to inflation to a certain level. And so basically the income side of things and the gain side of things tend to be adjusted for inflation, whereas the debt is hopefully then is kind of working like opposite way thanks to inflation. Now depends also, I mean, the interest rates can vary. Some mortgages have variable interest rates, I guess. And so some of it will be caught up by just that, but usually it doesn't catch as much. Well, it's not as basically the increase in interest rates isn't as strong as the inflation in most cases. That's my understanding.
Yeah, you're winning on three times basically. Your debt is losing value, your rent is going up, and your appreciation is also going up. And even if you accord for upkeep costs or costs for to find new renters, most of that is, to me personally, I see the appreciation of my house, of my apartments, getting lost in the costs of keeping it up. So basically, I just nullify the appraisal of my buildings, but I just say whatever costs will be there will be the added value of over time. It's just a calculation I make for myself just to balance things out, but it's not too important here.
Okay. And then obviously as the unit, you own it for a while, you're renting it and you're paying back the mortgage. Basically, you're accumulating equity in there. What is your strategy with that equity? Is it something that you leave there, happy to just build equity, or are you taking it out to do something else with it, refinancing? What other, like, how basically we're talking about leverage, and I want to
Mhm.
understand a little bit, like, what's, in your opinion, what's the best way to use it? Is it just to pay it off, or are there other ways to deal with this?
Yeah, if people in the group have watched YouTube videos of America, you'll probably have heard about the refinancing, the takeout refinancing. That's not possible in Belgium,
Hmm.
unfortunately, because it would be very nice if you have a almost completely paid off house, you reevaluate it, and then get a mortgage that is bigger than the original acquisition price of the house. But that's unfortunately not possible in Belgium. The only thing that is possible is that some banks, not all of them, they basically allow you to, for example, if you've paid off 100,000 of your loan, to get a new loan from that already paid off 100,000, to get an extra loan, but only for that property in particular. So every loan is basically focused on one building.
Hmm.
You can get that loan out for renovation purposes, for example, but not you cannot get it cash. So you always have to put invoices to get the payments out. So
It
unfortunately,
has
you
to be
cannot get the.
justified and connected to the initial.
Yes, in some cases you could, but then we're talking about when you have around 8 or 10 houses already, then you can combine loans to have a very large loan. That's also possible but that's in a later stage. So in the start, you'll never be able to do that. Basically, the banks want to see you as a big investor and not just um, the next Belgium, the next Belgian who buys 2 or 3 apartments. But yes, it's and so for me, that is a very interesting tool, and I like to spread my loans as long as possible. So 25 years is always what I'm striving for. Some banks allow it, some don't. But the longer the debt is spread out, the lower my monthly mortgage will be, and also the higher chance I have that inflation will eat up the value of my loan. And for now, that worked pretty well, because the lower your basically, I'm looking for cash flow.
Mhm.
I think in Belgium, cash flow is really what you really need. You want to have your rents as high as possible, or your rental income as high as possible, and your mortgages as low as possible, because the difference in that you can then use as a snowball effect to buy your next property, get more rental income. So that's where the leverage is. Or, of course, you can sell your property after a while, but then you lose your rental income. So it's a bit of a tricky situation there. But basically, what I see most of times is people buy, they pay off for 10 years, then they sell, so they get the money out, but they have the appraisal of the building, they have part of paid off, and then they use that to buy 2 apartments, or they don't sell it and then just buy the next one after a few years. And it can go quite quickly.
Mhm.
I know people that started out with one apartment. After 5 years, they bought the second one. Then after three, the third, and now they're buying every year 2 to 3 apartments, depending on the cash flow they have and how they can manage their loans. So it can go very quickly after a while.
Yeah, and I imagine that in this case, the very first deal, the very first investment is very important, because if that one goes well, then it frees up cash flow. If it goes poorly, it takes cash flow, which means you can't even invest in the second one, or it makes it even more difficult to consider that as an option. So it seems like the very first investment, at least in my understanding, has a big impact on whatever happens next. Is that right?
But yes, definitely, because Belgium is, well, we are pretty expensive in real estate wise, but we're not expensive at all compared to Paris, London, or the Netherlands or Germany. We are It's pretty expensive, and our return is pretty low. So in most cases, you will not have a positive cash flow from day one, especially not if you try to lend as much as possible. For me, I have enough cash flow, so I try to get 100% loans, so I get the lowest possible, so I get more and more cash flow. But in the start, that is sometimes a bit different. Sometimes you have a negative cash flow of a few €100 a month, which is annoying, and it's obviously not a good well, it's a good investment to start out with, but as we said, rents will go up over the years, but your mortgage payment will always stay the same. In most cases, we have fixed interest rates anyway, so that stays the same over 20-25 years, but your interest rates will catch up with that. And that's the same I had back when I started. I had a negative cash flow of few €100. Then I was able, after 3 years, to refinance. Well, one of my mortgages was a variable loan, and if you, for example, KBC, I think BNP does it as well. When your variable loan is up for negotiation, you can also choose to make your loan longer, which was very interesting to me because it dropped my monthly payments by a lot. I also paid off a little bit extra, so basically after 3 years I had a net positive income on my cash flow, which was nice, and then it gave me more leverage to buy the next one. So to get there, either you have to wait, or if you have extra money, you just pay off your loans a little bit faster as well. That's also possible, basically.
So trying to see how this works, because it seems to be a balancing question, right? But just maybe to react on the last point that you made, you can decide to pay off your loan earlier, but that would basically reduce the mortgage payment, so free up cash flow. Is that what you have in mind?
Yeah.
Because to
So
me, that feels like it's you just putting money somewhere that you could have kept the money and then have enough for a down payment again earlier if you don't pay, if you don't put it into paying the first loan. That's kind of my understanding.
yes, no, it's a very good understanding. But the problem we have in Belgium is that banks are pretty strict. And I won't get into too many details, but
Okay.
basically banks look at your income.
Yeah.
They take a certain percentage, and that's what you can pay off. And the same goes for rental income. They only take a percentage of that you can pay off. If you are on a limit, then the banks will say, okay, we cannot lend you anymore.
Yes, I
Um,
understand that. Okay, that makes sense. So yeah, there's also the bank requirements that make
mhm.
it so that you want the cash flow, well, the mortgage payment to be actually low, so that they see that you have sufficient cash flow basically to pay
Yeah,
the next one.
exactly.
And so when you do your first investment in terms of mortgage, should people try to have the biggest mortgage possible over the longest period of time? That seems to be one way of dealing with it. I guess it depends on personal situation and what the banks are allowing, or a bigger contribution, a smaller mortgage to basically have positive cash flow from the start. Like how do people deal with this?
I see both, basically. People that have a lot of money saved up, and then they don't want to put it in the stock market, or they're too scared to put it in the stock market. They put down a lot of down payment, so their mortgage is rather low. But others say no. I even want to start with a negative cash flow because I will wait and I will bide my time and it will come. To get the most return on your initial investment, you want to lend as much as possible. If you're able to lend
Yes.
80 or
Okay.
even higher percent, your return is on what you invest. If you have 100K, for example, you could put that in one acquisition or in two or three, and then three will obviously give you more rental income, but also you will have to pay a lot more in mortgages. So a very hard debate. There's a lot of factors here, variables.
Mm,
It's risk, it's what the banks allow, it's what your cash flow allows, and it's basically you have to find some sort of balance between all of these,
yeah.
while still being able to carry the risk mentally as well, because it's sometimes you have quite a burden after a while.
Yeah. Yeah. I mean, just the fact of knowing that you have this massive debt is probably, it can be stressful.
But you really get used to it quite fast, to be honest.
Yeah.
And I know someone in Leuven who's buying student housing, and he started, but he's doing it in his company, but still he has a higher income in his company. But he started out 4 to 5 years ago, and now he has 27 student housing. So he's just buying every month or every few
Yeah.
months, and it's crazy.
I got used to
And
it.
I,
Well,
it got used to it, and I think he has over 1 million in debt at the moment. And he's like, yeah, I don't mind too much because my cash flow is 3,000 positive or something like that. I'm just
yeah.
making
And
up
then it's all
numbers
in the
now, but
company, so he still has some protection. And
yeah, exactly. But he's just saying, I don't care, my cash flow is ample.
yeah.
So yeah.
Okay. So yeah, some people are able to tolerate much higher risk
Mhm.
because that's just how they're built. which
Yeah.
hopefully leads to higher reward, but also it could just go badly if there's so much leverage. Well, I guess there's extra risk, which is that's what we call risk. No?
Yeah, exactly. But the risk is pretty limited
Mhm.
because on the one hand, banks will never give you out a loan above the value of the house. In very rare cases, they will, but most of times banks will ask you to put down at least 10 to 20%. So you even have this margin of error. Even if you go bankrupt the next year, you'll have paid off already quite a lot, and normally the value will be there. So the risk is pretty limited in
Mhm.
this way that even if you go now, bankrupt is a weird way to say it as a person, but even if you are not able to pay, the real estate will be sold forcefully, and your loans will just be paid off. In most cases, of course, sometimes you buy something so specific that loses value and then loses half of its value. But we're talking about investment apartments. In most cases, they don't lose
Mhm.
that much value, even if it's a forced sale. So
Okay, that makes sense. And then from the point of view of an index investor, because I think we have, what traditional people would do is like, well, they don't really have many other interesting options to do with, with their investment or with their cash. But someone who's an index investor, and I think, most of my audience knows how to invest in ETFs because that's what we talk about the most. Certainly then the alternative for money, basically where you put your money though, is different, right? Because either you put it in the real estate or in the stock market. And so the stock market is really interesting, which makes the real estate deal maybe less interesting to have a lot of cash into. And in this case, then I understand that the idea then would be to minimize your your down payment, maximize the loan, so that you optimize basically the returns on the real estate investment as well. Is that what you see, or?
yes, so I cannot buy an apartment every month, so basically I have to save up money even over time as well. So it's also very hard to just say, okay, now I have money, now I'm gonna buy it. That's not
No.
possible. Sometimes the last apartment took me 6 months to find, and it's a good investment, but it's not a great investment. So sometimes some acquisitions once in a lifetime basically are once in a lifetime. So you cannot really save up until you get there. So I'm also invested in the stock market as well. So the return is different, the risk is different. So it's completely two different worlds. But also to come back to the cash flow, I also said that I sometimes pay off my debt a little bit earlier just to free up more cash flow. And investing extra in a debt, basically, I'll put some numbers to it. If I put in an extra 1,000 euros on one of my credits lines, my monthly payment would drop by 5 to 6 euros. Doesn't seem like a lot, but 6 euros times 12 is 72. 72 euros on 1,000 is 7.2%. And of course, it's cash flow, so it's not only interest I have to pay, but to me, cash flow is more interesting. So for me, I am now comparing potential returns on the stock market to a fixed return, or at least a fixed positive cash flow on my real estate. And of course, I could still debate, well, I have very low interest rates, so I can just leave it and then make sure the money becomes worthless over the next 5 to 10 years. But if I need to drop down my cash flow, then the 7.2% is not bad at all. So I'm also a bit debating on putting more into the stock market or paying off some of the credit lines. And not all credit lines have 7.2%. Some only have 3. So yeah, it's not always most interesting. You basically have to check and debate. But it also it also it's a 7.2%, let's say, return on on your investment now, but it basically will also diminish the total return on investment on your property because you invested a chunk in the start, but you're like adding to that over time.
So you're
By
diluting the initial
yes, so
investment in a way.
yes, so to give some numbers, and
Mhm.
they will sound high, but if you want, I can share them after. The first apartment I bought was a great deal. It was a super. It was below market. So I also was able to buy it at with 100% loan. So I only had to pay
Wow.
registration fees and the cost of notary. So it cost me it cost me something, but it was not expensive. And I rented it out via Airbnb as well. Back in the days that Airbnb was very little taxed. Now it's a little bit more taxed, but back in the days there were no real rulings about it. And the income there was very high, basically, and the return on investment was around 60% for the first few years.
That's amazing.
Because
Yeah.
yeah, because the apartment itself cost me around 15,000 to buy it altogether, just that apartment. But I got around 1,000 euros net. Well, no, I got 1,000 euros as income as Airbnb, and then minus all the costs, I would get around 7.5 thousand to 8,000 net every year due
Hmm.
to the Airbnb, and 8,000 up to 15,000. Well, that's basically 60%. So it is possible, but it's rare. But basically, that sets you off in the right direction. Of course, it's doing it as a business, so it takes a lot of time. I quit it because the 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 taxes became high, and also I didn't want to spend time anymore. It was quite cost intensive, time intensive, and my return now is a little bit lower, but it's a little bit more passive. But
Hmm.
if I pay down more, my initial investment will drop. So maybe after a while, my return on investment on the apartments I have will be too low, in my opinion, that I sell and I start over. So the money I I kind of refinance because I take the money out by selling
Hmm.
and then distribute that money over a few other apartments to get back to the original return on investment.
Hmm. Yeah, that makes sense now to me. I mean, I'm trying to figure out how this works, but refinancing basically in Belgium is done by reselling. So you pay transaction costs again, but then you have the cash freed up, and you can use that as down payment for new investments where you get again, hopefully then you find good deal that's undervalued, you get a good mortgage, and you start again. You basically improve your returns again on that specific money, right?
Yeah, exactly. And the unfortunate thing in Belgium is that we have quite the high acquisition costs. If you have your own
Yeah.
house and you're selling the
So it's
second
really
one,
finding
yeah,
this balance between the acquisition cost and transaction cost, basically, and then basically finding the correct time to sell and buy the next piece,
yeah,
to
yeah.
put the money to work again.
And
Um,
that's where the longer period comes into play because I think you're paying around 15% the first year. So it's going to take you 3 to 5 years, just to say something. It will take you quite a long time to get that out and get your money back out. So
mhm,
it's a long game, basically.
yeah,
It's
yeah, yeah.
even longer than the stock market, way longer.
Okay. And so it seems that for you, the first investment worked out. Would you say that in your case, then it allowed you to buy the next investment fairly fast? I mean, how did it help you continue on that journey?
Yeah, well, full disclosure, the first acquisition I did was a very good acquisition. It was a building of 3 apartments, one of which was the one I did via Airbnb. So I just divided all costs by 3, was able to rent them out from day one, and it had a positive cash flow after 3 years.
So you had three units that you rented?
Yeah.
Wow. Okay.
Yeah, one of them I lived in myself, and
Yeah.
that was the one that I also did via Airbnb. So every weekend I was with my parents because I played the
Okay.
cello and I was there for the music school. So I was not in my apartment the weekend. So I thought, well, let's just rent it out in the weekend. And basically that gave me 1,000 euros a month, which was great
That's
because
amazing. And then the other two
yeah,
two units were rented in a regular way.
rent in a regular way. Yes.
Okay, so it says you were renting. I mean, thank you for sharing the details. It's like practical examples, real examples that really will help people figure out, okay, what basically you need to be somehow creative for this to be really interesting, right? And can you tell us a bit more about then what happened next?
Yeah, sure. When I bought it, one of the rental agreements was already running and it was under market value. So the rental price was under market value. But because you buy, you can always renegotiate rental prices at that point in time. You cannot wait too long. So I sat down with the renters and I said, well, I'm going to increase the prices because I want to be at market. And they said, well, fine. But I also asked them what are you still missing in this apartment? And they said, well, we don't have a washing machine. So I said, okay, fine, let's increase the prices, but I will put a washing machine in the garage so you can use it. It's negotiation, and we did that, and that's basically then I got my rentals at market price, and then those have increased over the years via the index, of course. So after a few years, when I renegotiated my loan, the variable one was made 3 years longer. So
Mhm.
I think my payments dropped around 250 euros a month, almost 300 euros a month, which gave me more cash flow. And then 1 year after, that was in 2018 I bought. So in 2020, yeah, it was 20, I think the first negotiation was in 2020. My cash flow dropped, and then in December of 21, excuse me, I was able to buy another apartment because my cash flow was getting bigger and bigger. Also my wages went up a little bit, so my availability to pay down every month grew. So that's what you want to try to maximize your rental income, lower your payments, basically.
Thanks for sharing the journey. It's really helpful. Now, what would you say are the key elements then for someone who's looking to invest in the real estate for first time for that to go well?
The first one is always the hardest. That's just unfortunately the way it is. So you really have to debate to wait for the positive cash flow or to just buy or to put in more. Your return will be lower, but you have to think about real estate in the long term. So the first one is always, of course, I was lucky to buy something that cash flowed pretty quickly, but sometimes it takes a little bit longer. It's basically that first time, whenever you have one apartment and that starts to positively cash flow, then it will add on onto your ability to buy more and more. It's always that first one. So yes, the return can be high if you lend as much as possible, but it might be necessary to pay off a little bit extra in the start. You just need that positive cash flow. You have your income of your wages, but you need this extra basically to buy the next apartment. You have to add, add, add.
It seems to me then that the purchase price plays a big role compared to the how much we're gonna be renting it out for, right? Because the based on the purchase price, then the loan will be determined based on that. So, are there ways to find deals that are undervalued? We talked about this at the very beginning, that we try to find a deal that's undervalued, like we're trying to buy stocks that are undervalued. Not me, but active
Yeah,
investors.
no, yeah, I understand.
Um,
Yeah.
how does that work? How do you find those? What's like how much work is there to do? What are the sources of information? Because my understanding is you go to ImoWeb, it's too late, right? I don't know exactly, right? That's what I've heard.
Yeah, that's true. Well, in a way, I guess. To buy under value is hard, obviously, and there are deals on ImoWeb, so both is optional. Of course, if you have a friend that is a broker, they will often the best deals go to the broker themselves, then they go to the direct clients of the brokers or the friends of the brokers, and then it comes to ImoWeb. So basically, when they cannot sell it right away, they will put it online. But that doesn't per se mean that it's a bad deal. Maybe basically we what I do is I basically have my how do you say it? I have my product, I guess. You have to see it again as a business. You're selling a product or you're renting out a product, and you want as much people as possible buying or renting your product. What is the best product? Well, it's an apartment in the center of a bigger city, can also be smaller cities, but where there's a lot of commotion. And most of times it be either a one studio apartment, but preferably a two studio apartment, and not too big, because there will be more people interested in those kinds of apartments.
So 2 bedroom, right? You mean?
Yes, two bedroom,
Uh-huh.
because one bedroom, the target audience would be a single or a young couple, I guess. But a two bedroom would also open it up to singles, a young couple, but also a young couple with a child or two children even. So they will either stay longer or you will have more people interested in your product. Of course, if they need a garden, yeah, then you're out, I guess, and then they will go outside of the city. But basically, you will have a lot more people interested in your apartment, as well as when you're selling it. Two bedroom apartments always sell better than one bedroom apartments, studios. Um, it's a little bit different if you're targeting expats, I guess, because most of times they live alone or in a small family. It's also furnished, but that's a different kind of product. But if you're just buying investment apartments, should always go to two bedroom apartments, not too big, 60, 70, 80 meters, maybe 90, but not bigger than 100, because you're just going to pay extra for the extra surface, but you're not per se getting more rent for that. An apartment of 200 square meters will not have the same return as one of 70 square meters,
Mhm.
obviously. So basically, you're looking at what's my product and how can I
Right.
market it.
So you're basically identifying also the sweet spot between purchase price and rental price, right?
Mhm.
Which is where is it that I can rent for the highest amount, but also paying the least per square meter. And that seems to be, from what you're saying, 2 bedroom apartment in a city center that it's between 70 and 90 square meters in total size. And I guess this comes also from, well, just the data, right? There must be reports and source of data and statistics that show that purchase price versus like the ratio of rental versus purchase price. There must be certain technical terms here that I don't know of, but I guess that seems to be sort of the sweet spot in that specific area, like in what we're
Yeah,
talking about right now. Okay.
and you can, depending on where you live, but you can also calculate, I guess, this a little bit easy on ImmoWeb if you just look at average prices of selling prices, but also renting prices for the same product, the same apartments of the same surface, compare it to the same bedrooms, the same rental price, and then you have a quick understanding of what you would get. And sometimes you get, for older apartments that are energy not so efficient, you'll get 4 to 5% if you just divide 12 times the rental price divided by the total acquisition price without costs, just the blank numbers. That would be a rather good investment. But if you buy newly built or very recent, then that will drop down to 3.5. In fact, just to give an idea, but basically you're just building a little bit of a strategy, and the strategy is basically for everyone a little bit different, because
Mhm.
some people are fine with just 3% return on their investment in a safer bet, and other people say, no, I like older buildings, I guess, fix them up a little bit before I rent them out, and then my return will be higher. To me, I'm not very handy, so I try to not do the latter, but I guess everyone can do it. I know people that buy horrible houses, I guess, or they're very bad, and then they fix it, and they fix it quite well, but they do it themselves, so it's not done professionally, but it's done, and so their return is a lot higher. Is it good on the long term? We'll have to see. But for
It's
now,
also a lot more work, and
yes,
we have
definitely.
to put that as part of the investment, some kind of hourly wage and calculate and put in. If, but then if they have, I guess this type of approaches also depend on people's personal preferences, but personal situation, right? So someone who, say, like you, a finance consultant, is making good money working for clients, and basically your hourly rate is pretty high. Spending
Mhm.
that same time doing manual work in your house might not be the best approach, right? Whereas you might prefer basically either subcontracting it or going for something that doesn't require this, because you have your earning potential seems to be higher maybe on your career side. So I guess this is some question also for people and individually see where is the highest leverage on their time, and basically focus on that and try to subcontract or not have to deal with the part where it's potentially I don't want to spend time you know cleaning my house, and I'd rather have a cleaning lady doing it. Part of
Yeah,
it is because my time is better spent doing something else that has way more value for me. And I think this a similar analogy can be applied here in terms of like how, well, basically that can inform your strategy, right? If you're a
yeah,
handyman
exactly. Yeah,
and that's
yeah.
also your core thing, and you can, because outside you're not necessarily making way more, then that is a really good deal. Is like, go and do it yourself, because you can increase the value of this place by maybe 100,000 euros or whatever it is, right? If it's really in bad shape. And that could be the way to make it. Because often we hear the way to make money in real estate is to buy a dilapidated property, upgrade it, and then whatever, rent it at like double what it would have been otherwise, or whatever the numbers. But then there's the cost of renovation, which has to be taken into account. And if you do it yourself, yes, but maybe you can't. Or well, if you have to pay someone else, then you have to add that to the cost of acquisition, plus the
Mhm.
time that it takes to actually do the work until you can actually rent it, which means for a while you have just to pay the mortgage, but you don't have an income. There's all of these questions that are quite tricky to deal with, because then in that case, speed matters a lot, right? You want
Yeah,
to get it fixed up and rented out as fast as possible, because otherwise it's like a massive gap. This All these aspects are quite important, right?
yeah, exactly. And to me, I'm not that handy, so, and even I don't have much time. So if I do it, it's on the weekends or in the evening, so it's very limited in time. But the last apartment I bought was built in the 90s, 94, I think, and it was in good condition, but it looked very old, basically. And I think I spent around 7 to 8 thousand euros on it extra to refurbish it, but most of that was painting, putting some new furniture that looked good, and paying someone else to fix a few things in the bathroom and in the kitchen. So things that I can't do, or I don't even want to spend the time learning to do. I subcontracted, I guess, spend around 8,000, and I think the just by painting it, if I would have done only paint, which cost me 600 to 700 euros, the property would have been 10,000 more, just because it looked old versus now it's painted and it looks new. Well, new, it looks more recent, and basically that small thing, which I can do, I can paint, that's no problem, and put new lighting. It just adds so much value. And if you buy something that is energy efficient, because maybe we'll touch a little bit on the energy as well. But if you buy something that is structurally sound, structurally good, but only looks old, and you can quite easily fix that, then you can add way more value on your building in a very short period of time as well.
Mm-hmm. Yeah, that seems to be a way of creating, well, getting a cheap deal is to find something that can be brought up to a good condition fairly fast, right?
Yeah, it's basically buying a banana that looks a little bit too brown, but it still tastes good, right? So it's there, but people don't like it because it's not
You paint the
new.
banana yellow.
Yeah, yeah, yeah.
Okay. Yeah, but
No,
I
yeah,
understand. Sometimes it's just a question of presentation and basic maintenance that hasn't been done for a while, and you just do it, and then it's like, oh, it's actually good quality stuff. It just doesn't look so good before the cleaning, right?
yeah. A colleague of mine is selling her house now, and it's a normal house. It's not a good house. So it's not a bad. It's a standard house basically. And she had two realtors. The first one made horrible pictures, and they were not able to sell it. Took 3 months. Then they put a new realtor. They made better photos, like actual. They represented the reality better, and it was sold within 2 weeks for the same price they listed. So we're not putting a new shell on something that's bad, no, because it's structurally good, but we basically present it better,
Yeah.
basically. So
Yeah, it's not hiding the bad stuff. It's just
yeah,
presenting
no,
what's there
exactly.
in a
Yeah,
better light and basically maybe fixing a few things that don't cost so much to
yeah,
fix but are
exactly.
important
Yeah,
for the tenants, right? And which or the buyer. Now I'm curious because you said you've invested in apartments, so I'm assuming they're part of buildings. Now the first one I understand you bought the whole building. So that in that case you have control over maintenance costs and repairs and whatever is needed because there's no syndicate, there's
yeah,
no
I
common
am the
costs.
syndicus. Yeah.
Are you also investing in apartments that are part of like a bigger complex and maybe there is, shared costs and maintenance
Yes.
costs
Yeah.
and
Yeah. And of course, for bigger investors, or the ones that are further in the journey, buying a whole building is easier because you can do the maintenance yourself, and as you say, you can reduce costs. The older apartment I have is in a bigger building, and we have our monthly fees for the elevator, for the syndicus, the cleaning lady, I guess, and the taking out the trash, and we pay quite a lot for that, and that's money that is not adding to the value. It's yeah, okay. You can partly ask your tenants to pay for that money, but not all of it, because insurance, or putting up a saving fund for future investments in the roof or in the walls is something that is always saved for, but you have no or very little say in that, because only in the general meeting every year you can come together and you have to make decisions. But are these good decisions? Well, 20 people are making them, so how good can they really be?
it depends
Yeah.
also who are the other owners. If they're investors like you, then they might have a business sense. But if they're tenants who live there, not tenants, but owners who live on the spot, they might have different priorities as well in terms of how they want to spend the money, how much should be spent on doing certain things, I guess. So it depends a bit on the type of property and who
Yeah.
else is owning the other pieces, right?
And also the size of the building. For example, I have this. I don't like. Well, that's a personal preference. I hope I don't insult anyone here, but sometimes you have these very big blocks, 7 to 9 stories high, and 20 apartments per floor. So there's at least 100 floor. There's a lot of those buildings on the outskirts of Antwerp. They're pretty cheap, but they have a hugely monthly costs. I think they're at least 250 to sometimes even 400 euros a month to pay for your. Yeah, it's crazy high, and that's basically lost money. And if you want to buy investment real estate, you also don't want to pay these monthly costs. You can ask your tenant for a part of it, but not all of it, and that's lost money. So if you have the choice of the opportunity to buy an apartment or a whole block, that's awesome. But if you buy an apartment in a smaller block that, for example, does not have an elevator, okay, you'll pass out on some of your potential renters, but you'll have way less reduced costs. So yeah, every little euro counts every month, and especially if you're investing for 20 years. So
What about the idea of acquiring a piece of property that you can then either sublet to various tenants or divide and then rent again to like other tenants? Is that I've heard this is a like a common investment strategy that's usually quite interesting. What do you think of that?
like co-housing, or
Yeah, actually, basically buying a place that's not meant to be for several people and then making it into one.
Mhm. That's not easy, and it really depends on city by city. In Antwerp, we are very much struggling with that. We have a very big shortage of housing. That's why it's also pretty expensive because yeah, people are just paying and bidding. Sometimes renters even bid to be able to rent. They will overbid the rental asking price just to make sure that they have it. So Antwerp is in need of more apartments, but you cannot just divide an existing apartment, even no matter the size of it. If it's obviously if it's 50 square meters, it's hard to divide, but sometimes you see apartments of 150 to 200 square meters that could technically be easily divided, but it's not per se allowed. You're
Yeah, there's
making
urbanism and
yeah,
those
it's
kind of things.
the ruling. So, but on the other hand, you could do some sort of co-housing or Airbnb, I guess, if you have an extra room or no extra. That is possible, but co-housing, it's not my cup of tea. I don't have too much experience in that, but
There's also extra work, I guess, for the
yeah,
management of it.
and always it's rented out to one person who is then responsible for all the other tenants. So that's the subletting part. But sometimes these co-housings, the one unit is then rented out for 2 to 5,000 euros a month, which is then for one person. And if all the other tenants decide, okay, we're gonna leave, then they're gonna have a problem the next month. So as a homeowner, I would not rent out to co-housing because I don't want to do the hassle, and I kind of don't want one person to be responsible for the payment either. So especially if it's such a high one.
Yeah, and then yeah, it's a different type of tenants as well. So there's potentially some more work in terms of maintenance. There's more
Mm.
rotation if there are students, they can be moving in and out, and so whatever, all the things that come with it. But I guess it's probably more common in university areas where there's a lot of people who are, well, just students, but also young professionals seems to be doing this quite a lot, and especially in Brussels, for example. I have a lot of friends who do that. So I guess it exists. I was wondering, yeah, what your opinion is about. But I think it makes sense that as an owner, you're also taking risk when you do that. So I guess if you take risk, there probably is also an interesting return on it. But that's again a choice to make between doing more work, taking more risk, and having more or less return. It's always a balance, I guess.
As we said before, the housing return is pretty low, or is at least lower than apartment return. So by co-housing, I guess you can get a apartment return on a house. So by dividing it into smaller apartments or at least units. But again, it's higher risk, it's higher
Mhm.
reward, I guess.
Could this work as a very first investment for someone who's single or just without kids at least, buying a bigger place, taking one room, renting out the others, trying to basically house hack that way?
Yes, house hacking is common, I would say even. Well, common. I know a lot of people that do it, and I did it as well. I bought my apartment and rented it out in Airbnb in the weekend. So I think that is a very good option if you're doing it yourself, if you're living there yourself as well. Especially, for example, you're buying an apartment with 2 bedrooms or 3 bedrooms and then 2 bathrooms, so you can really divide everything apart from maybe the living area and the kitchen or whatever. Then it would be a perfect match. People a lot of people co-house like that one person is buying and the rest is renting. That is, I think that's better than co-housing where everyone rents. So that's one real responsible person, and it's better for that person as well because yes, they're paying off their mortgage, but if they have one or two renters, then they pay a lot of that original mortgage. So it's
Mhm.
for them, it's way easier.
I guess if you get the numbers right, you could even cover the entire mortgage and technically live rent free if you find a property that's valued low enough. Maybe you do the work yourself inside. You increase the value enough that when people come and rent it out, they're paying a decent price that covers the mortgage. There's probably a way of engineering this if you find the right property to get to
Mhm.
something quite interesting at that point, right?
Yeah.
And
If I divide the original loan I had on the apartments there, just my part would be around 700, no, around 600 euros of mortgage every month. And then I would get around 800 net of Airbnb, just 2 days a week.
yeah,
So
okay.
basically, I lived for free there, and that basically adds up. My girlfriend now, she used to have a roommate as well. She would be paying 700 euros. The roommate, I'm just making up some numbers. The roommate's paying 400. Well, she only has to pay 300 instead of seven. So yes, it does help. And if you do it, and you have an apartment that lends to it, that you can do it, then it can be very rewarding and can even be better. And even if you just cover the interests, that's even already good, right? So if you're only paying down your own principal, then it's basically just putting your money on a savings account, which is your house.
Yeah. So I guess because we were talking about the importance of the very first deal, and those options are usually available for people who are not in couple yet, right? But that can be also later stages, and depends on personal situation. But I would
Yeah.
say for people who have the flexibility and the option to find some way of which we call now house hacking, which is a way of acquiring a property while basically renting, subletting or renting out to others to reduce or basically to optimize for mortgage repayment. That seems to be an interesting way. And there's basically, it seems to be from what we've discussed so far, two ways. One would be Airbnb, the times where you're not there. And the other part would be, well, if you have more space than you need at that point, and maybe you've obviously bought with the idea of renting out, then you have either extra apartments or extra rooms that can be rented out for car housing. So that seems to be an interesting way of starting if you have the flexibility, right? And the time to put into, well, there's some management, at least there's some work to do in terms of setup, because it's not just I'll buy an apartment and I'll rent it out. There's a bit more work, I guess. But that seems to be, for someone who has time and flexibility, is something that could be quite interesting.
Yeah, and in the southern suburbs of Antwerp, I'd call it, there's a lot of houses that used to be a one family house, but now they have been divided into, in Dutch we call it kangeroewoning, basically where it's one house, but basically there's two. It's two units in one. So that would also be a perfect option as well. You buy the whole property, and oftentimes if it's your first acquisition, you could even get a reduced tax rate on that as well, which is nice because you're buying in essence two apartments at a reduced price tax,
Yeah,
and then you can easily rent out the second part via Airbnb or short term or even students.
because you live there as
And
well, so the management is a bit
yeah,
easier.
exactly, it's way easier, and you can do the management whenever. You don't have to travel to the apartment to do the Airbnb, because Airbnb, I did it. It took me 4 to 6 hours a week, which is much, is not a lot. I find it matters as it's like you see it. But if you you also have to drive 2 hours to get there, well, then it's really adding up, and then the added value will not
Yeah.
is
And,
not interesting.
but you were doing it in the place where you lived, so
Yeah,
that the 4 to 6 hours were not including driving because you were there.
no, it was
Or
just there, but I had to clean twice. So
yes,
after when I left and when my renters left, so I had to
clean and
for every
change like
yeah,
all the
exactly.
stuff, no bed sheets and towels and whatever, all the.
Yeah, so I basically limited the availability of 2 days a week, but only in the weekend. So there was only one group of people that came by every
Yeah.
week. So I had to clean on Friday or Thursday when I left the apartment, and then on Sunday when the guests left. So it was annoying, but it was double the cleaning, I guess. But also another negative point there was the apartment. Okay, it was my apartment. It was not really personal because I could not really put in decoration I like, for example, because people are coming there every week, and that's
Yeah, you had to keep it interesting for others. So the
yeah,
product was not just yours; it was also it's a product you want to lend out, to rent
yeah.
out. So you also had to keep that part of it in mind. Quite interesting. Okay, but it's interesting to see, and I guess it's something that people can do in certain part of their lives. I guess it's probably different now that you have a girlfriend. It's not exactly as flexible, but it's what was worth it, right? So
Yeah.
it's like basically doing it when you can at the right time. And if you have the right mindset and you're willing to put in a bit of work, it can really set you up on a really nice trajectory. This seems to be like really important advice for, say, students who are like just gonna get started in their career. And if they know they want to go in real estate, it looks like they could benefit from a course on house hacking.
Yeah.
I mean, you were telling me that you might be teaching at university or in technical schools. So I think that might be quite interesting for them. I certainly would have liked to hear about all of this when I was at uni, because then I would have thought of, okay, so I have different ways of dealing with this. And that is one way of basically optimizing income
Mhm.
quite early on, right?
Yeah, exactly. And you cannot do it as a student because you cannot get loans as a student, but of course you can prepare as a student. If what I did is the last few years I worked as a student worker. Basically, you have your maximum amount of money that you can earn. But in the last year, I just had one class in the last semester, so I basically worked full time apart from the few hours I had to go to school that to university that year. So I was earning a lot that year. It was taxed very little because you're still a student, and that money was then directly used to, luckily I found that opportunity shortly after. So it was, you can prepare, but you cannot start as a student, but you can start
Mhm.
directly when you start working, basically, well, 3 months after.
So
That's
what put
technical, I
you on
guess.
this path? Like it looks like you almost started perfectly.
Luck,
You know,
I guess. Yeah, yeah. It was not a deal on ImoWeb. It was basically friends of my parents that left Antwerp, and they said, "Well, we're gonna have to get rid of this building. It served its use. We're gonna sell it, and we're gonna go to the sea." I guess they went there, and they kind of offered it to my parents, but they say, "Oh, we don't wanna we don't want it." And then I said, "Well, I can do this, I guess." I ran some numbers, and then everything kind of fit. So I just went for it. It was a big decision because if I look back to it, I think my first mortgage payments every month were almost exactly the same as what I was earning at that point in time. So it was quite heavy. But of course, I had the rental income. But if everyone would stop or leave the apartments, I would basically go to work to pay off my mortgage and could not eat.
So it was a very big investment for where you were at that point.
Yes,
How
definitely.
did that work with the bank? I'm trying to figure out now. You got 100% financing. Sorry, are you okay if we speak about this in more
Yeah,
details? I don't
sure.
want
Yeah,
to,
no problem.
I'm
The
really curious now, and I think it might be useful for people to figure out, to understand
the
how this works.
this was when interest rates were pretty low.
Okay.
That was
Yeah.
also very nice. And nowadays banks are a little bit more strict in that case that they require an appraisal before they give you the loan. But that would have worked in my favor anyway, so that's fine. Because the people wanted to leave as soon as possible. I don't know what their reasoning was, but they had to sell quickly, basically. And so they basically sold it under price, which was in my favor because the bank probably saw that it was worth quite substantially more than I was acquiring it for.
Mhm.
So they were
Okay.
quite flexible for that. And then, of course, I had enough money saved up for the registration fees and all that. But they basically gave me the 100% loan for the whole building, but they split it up in two, where they had the investment part, which was only on 17 years at that time, which was then it was variable. That was then to 20 years after a few years. And then my part, my official, the one I lived in, was on 25 years. So the mortgage was a little bit spread out amongst those things. But I was working at BNP, the bank, for half a year by then. So I had my income. So I had my continuous cash flow from work. So I think the banks took a kind of a bet on me as well, but it worked out. And I spoke with a few banks, and KBC basically made the decision to go with it. And I guess we're lucky.
Mhm.
I am lucky that we did.
When I think about it, then the fact that you also acquired it below value made it so that when they give you a 100% loan is like of the purchase price, but not of the value, right? So if it was to be
Mhm, mhm.
then, sold because you cannot afford to pay the mortgage for whatever reason, they would still get it back because the value is higher than what they
Yes.
actually lent out to you. And then the other numbers kind of fall into favor. But I'm trying to figure out the cash flow question here. If you're telling me, well, if I don't get one of them was like an investment loan and the other one was a personal loan, was that right?
Yes. And the investment loan was basically covered by the rental income.
Yeah, so that was
And then
separate. It's not looking at your personal income and seeing if you can handle
no,
the mortgage just on your own,
exactly.
because for the whole thing it just wouldn't fit. It would take the whole income. So
Yeah.
like in terms of ratios, that wouldn't work. But because part of the house was your part of the investment was part of the loan was an investment loan. That's interesting that they let you do that at the same time as your personal loan. But it's great. It's amazing. Like it's so many factors that came together for this to work out really
Yeah.
well. Well done.
Yeah. It's luck basically. I've seen it since two times, but I wasn't able to go with it because I don't have any cash flow at the moment. But you sometimes see it, well, these kinds of deals, and yeah, sometimes you just have to jump for it. And I did that, and it was a huge risk. But then again, I thought I'm buying it under price, even if I can't pay and the bank has to sell, they will get their money back, and I'll have to start over. But then
That
yeah, it
it
doesn't
was
matter.
fine. Yeah, it was fine. Yeah. So taking those risks early on and actually going for something quite risky early on might
Yeah.
be good. And if it turns out, well, it turned out really well. So it sets you on a really nice path, right?
Yes, and the first years were great, and now since it is an older building, the energy scores are were pretty bad on the building. So this year it's almost a year now. I've been renovating the building. In the last year, I've been doing the flooring. The roof is going to go there in soon, and the walls have to be insulated. So
Hmm.
it's a huge cost. Yeah, I bought it under price, but if I add the renovation costs I'm doing now, the under price is a lot less. So it will be the correct price by now, I think. But yeah, of course you buy, but of course after a while costs will come. So it was a very good cash flow at the start. Now it's getting a little bit less, but then again, it will be very insulated apartments, very good insulated, so I
Are
can
you
maybe discount.
recovering this investment on insulation in like the value of the property? Does the
Yes,
value, say
definitely.
you
Yeah,
put
yeah, yeah.
30,000 or 50,000, is also the value going up by the same amount?
Yeah, to put a
Or
number on it,
similar?
it will be around 50,000 I have to put in. It's not all there yet, but most of it is already invested there. I have to do the roof, and tomorrow people will come and appraise or put we'll see. So it will be 40 to 50,000, something like that. But basically, that money is then almost directly transferred to the value of the building,
Mm-hmm.
because buildings that have a good energy score are at the moment are pricier than the ones that have worse. I find the normal pricing is with a good energy score, and if you have a bad one, you'll be a little bit penalized because you have to do these mandatory renovations. And in Flanders, it has to be from EFG up until B. In Walloon area in Brussels, it's a little bit different, or not even obligated yet. I have to check. But yes, so it's invested and it will be added to the value of the building. And on top of that, Belgium and Antwerp are really pushing these renovations,
So
and
you
they're
get.
really giving a lot of subsidies as well.
Mhm.
So yes, it will cost me 40 to 50,000, but I think if everything goes well and I tick all the boxes, I think I'll get around 30,000 back in subsidies. So it will only cost me out of pocket around 20,000.
But it increases
But
the value of the property
yes,
by.
40 to 50.
And is that out of pocket, or can you actually go back into the loan and say, hey, I want to take some money out to finance this?
I refinanced. KBC gave me a new loan for that. It's a loan on, and it has an interest rate of 3.5%, so it's quite high. But again, it's on 20 years. But that is one of the ones that has around 7% cash flow. So that's the one I'm gonna pay off a little bit faster
Yes,
because
and they give you the loan. I keep digging because I want to
yeah,
see
no
how good
problem.
this is. It looks like it's an amazing deal. You got the loan on 50, or on the difference between the 50 and the
No, just on 25.
on
So the
25.
rest is the
The
rest is
rest
I have to
is
pay
the
myself.
government's incentive.
No, no, no,
Ah,
not even, because the government's subsidies, they come after half a year or even 8 months.
okay.
So I now have my invoices, and I have took out a credit of 25,000, which is now used. And then the next invoices, I think next month will come. The next 2 months, two invoices will come of 5,000 each, which I will have to pay. But again, my cash flow is high enough, and I know this half a year in advance, so I'm just saving up for those. So
Mhm.
I'm not unfortunately I did not lend or was not able to lend that amount of money, so I'll have to pay it outright. But
Okay,
enfin,
but you still got, you still borrowed a part of it, which means that basically
yeah,
it makes the whole deal better because you have more leverage.
exactly.
And okay, all right. So there's a lot of very positive aspects to all this happening too, right? Despite the cost.
Well, and there's a lot of good support from the government as well. They really want to have all the buildings to have good energy scores, and if you do it correctly and you have the time, because it's already taking a year and we're not there yet. If you want to do that, it can be really rewarding, even for your own house, because you're using a lot less cost for energy as well. So it will be very profitable very
Is it
very quickly.
is it possible to like look for properties that have not been upgraded yet and then hope for then that to happen to the property? Or it looks like, or my understanding is that these properties have to be renovated before they can be sold, and that's kind of what
So
you could
they
buy
don't
one
have
that
to
is not.
be. Yeah, you can buy one that is not renovated yet, but you have to renovate it within the 5 years. If it ticks the boxes of have to be renovated.
Mhm.
So in Flanders, if it has an energy score of E, F, or G, when you buy it, you have a timer that starts running for 5 years, and after 5 years, you'll have to be at D or better. But of course, you want to go to B or A because the subsidies are a lot higher at that point in time. But you can, and nowadays in Flanders it's called the EPC, in French it's called the PEB score,
Mhm.
the energy score basically, and basically states which parts of the house are in dire need of insulation. So you can decide to only take houses that only have to do the roof or the walls, but you really have to get a contractor to do it because it has to be done officially. You
Mhm.
can do it, but then you don't get the premiums and stuff. So
Mhm.
it's better to do it by someone else, but that's quite expensive, and especially it takes long. People they are trying to flip houses, they buy houses, renovate them, and sell them. It takes them 4 to 6 months, and they want to sell, or within a year. But as I said, I started with my walls in March, the end of March 2023. We're 1 year there. We're not done yet. So basically, an investor would not have done this.
Okay. Okay. So it's not a quick way of appraising the value of a place, gaining, but it seems that it's still one potential leverage when you're looking for a place that is maybe undervalued. And if you take into account all of this, if you know the math, you could say, well, after I do this upgrade and insulation, it's going to be worth so much. I should be able to get, finance it through a loan, this and that. I mean, it seems like it can be taken into account when looking at deals, basically, right? At the first property. Okay. Awesome. Awesome. Look, this has been amazing. I think I would like to quickly wrap up what we think, what you think are like the key elements for someone who is just getting started and is looking to acquire the first property to make it successful. If we could just quickly summarize, how would you do that?
Yeah, sure. I think it takes a while. So you cannot say I have invested now and I have saved up money now and I'll invest tomorrow. That's not possible. So you really have to do some research, educate yourself a little bit, because you don't want to buy the first thing that comes on your way. You really have to. Sometimes you miss a few deals before you get to the actual one that you really need. So don't just buy the first thing that looks appealing. If it's needed, talk with someone who is really known to that, or if you go to look for a house, take someone who, for example, ask a contractor to come with you to see how much things would cost to fix. Those are things, but also do some market research, and this is something you can do on your own. If you live in the city, you'll know which part of the city are more attractive than others, where are more expats or where are more people renting. Those are things you can all try to do yourself a little bit, or talk with people that live in other parts of town. Basically, it's knowledge, and especially for real estate, it's location. It's something very stupid, but basically the location matters a lot, because you're buying something that is literally immovable for the next 20 years, 25 years. So if you buy it in an upcoming area, which would be great, but you never know that. But you really want to buy in an already good neighborhood, or a neighborhood that's just getting good. And then financially wise, there's so many online tools as well. You can, but I'll also suggest talking with a banker, for example, saying, well, look, I have saved up this much. This is my, you can just ask for a meeting. Yeah? So you say, this is my wages. This is the apartment I would like to buy. This is the rental income I would have gotten. How much can I lend? Basically, you just ask the open question. They will give you some pointers. And it's basically getting from there. So looking around, educating yourself is the best things you can do. Talk with people who have done it. Yeah.
Learning from others, which is what we're doing by speaking to you. So
Perfect segue.
certainly for me, it's been a huge learning experience speaking with you. I really appreciate you taking the time. We still have time for some questions, I believe. Yeah. So I guess if the ideal way of taking questions would be for people to turn on their cameras and microphones and join the conversation, ask a question. That's the best way. So for those of you who have any questions on real estate for Joris, please join us on the stage, on the screen. I made the same joke yesterday. Oh my God, what's wrong with me?
I haven't heard it yesterday, so perfect.
Yeah. Okay. Hello, hello. Any questions? Joris charges a lot of money for hourly consultations, so now is your time to benefit from.
There's a lot in the chat as well. We can also pick
Yeah,
one.
okay. But there's somebody turn on the mic. I see a couple mics turning on.
Yeah, hi.
Hello. What's your name?
My camera is not working, but quick question. When you buy an apartment, do you look at the value of the apartment? For example, let's say the apartment in Brazil can cost a lot, and apartment in areas which are less expensive, but the rental is quite close to what you have in Brussels, right? I mean, maybe 100 or 200 euros difference. Then what do you do? How do you decide where should you buy? To switch off the emotional side and to dive into the practical side, what exactly you will do?
I would first look at the area. Where I don't want to invest in all areas. There's some certain areas in Antwerp that I do not want to invest in, because I don't know the area too much. I don't think, well, sometimes some areas are not safe to live in, so I try to get away from those. The return will be higher because your risk is higher. But basically, if I have two areas that look a little bit the same and the product is a bit the same, then I will basically just look at the numbers, and it might be that both options are perfect, but maybe then a factor to negotiate in, or to decide in, is what is easiest accessible. For example, sometimes you have to go to your property to to fix something. I've gone to an apartment just to open to reset the electricity switch, which is ridiculous, but I find sometimes you have to do stuff like that. So if it's easy accessible, then I would suggest going there.
Okay. And do you also look at a long-term value appreciation of the area? For example, if you buy, an area which is buying in summer central, where the perspective of appreciation is more. For example, it will grow maybe double in 5 years. There is a possibility. It depends on the area. Like cities are getting expensive every few years.
That's true,
right?
but that's very, very hard to predict, right? So if you're in the city center, especially if it's Brussels or Antwerp, you're pretty safe appreciation-wise. But when you are more in the outskirts of the city or even on the country, then it's going to be way harder. Now, Belgium is small, and we have a lot of residents, and all of them live in cities. Most of them live in cities, so the cities will always be pretty crowded.
Okay, can you give some advice in terms of going beyond ImoWeb? Because I have been in this process, and as you said, so it looks like ImoWeb is too late.
Yes, there's several options, but you have ImoWeb, you have ImoScope, you have Zimo, all these websites, and they're all a little bit the same. That's true. What I found useful is talking. Well, sometimes I just go, or at least in the past, I went to open houses or house listings that are on ImoWeb, but then I talk with the realtor. And sometimes they say, well, yeah, we're working on a deal that we're trying to get that customer in, because the main job for a realtor is basically not selling the house. That's the easy part. Everything gets sold, or 90% gets sold, but getting the deal in. So if I want to sell my house, the realtor has to convince me to sell the house with them. So basically, the realtor sometimes has an idea of, maybe in the short future we will have something, and that's basically what you want to ask for, because if you are able to buy something directly from the realtor, he will save time. He doesn't have to do all the marketing. He doesn't have to put it on ImoWeb, and he can just sell it in a few days. And you are the one that then not buy it from ImoWeb, where it already took a long time. So trying to go directly, or if you know someone, again, it's all networking. Sometimes I know a few people that own a lot of real estate, and sometimes they say, well, I know this guy who's going to sell his house or even his investment portfolio, and then it's time to get your connections rolling, I guess.
Okay, thank you.
Right.
Anyone else?
Hello.
Hey.
Hello, Holly.
I had a question about buying in Brussels. I was just wondering, what are your thoughts on buying a studio apartment? So which means no separate bedroom? Because for me, since the purchasing price is quite high, I don't see it as very worth it in terms of investment. Because for me, it can be leading to negative cash flows. Let's say I would have, for instance, I don't know, a mortgage of about 900, but then I would be able just to rent it for about 800, something like that. So the problem for me in big cities is also purchasing price is high. So yeah, if you just start to invest, you don't have quite a lot put aside. How can we make it kind of still worth it in terms of investment?
Yeah, this is not per se a question about the accessibility, or at least the amount of people that will rent, but more of the cash flow wise. So if you buy it and it has a mortgage of 900 and you only get 800 of rent, well, then the easy solution, I guess, is to put in more down payment so that your monthly mortgage drops. Of course, your return on investment will drop, but again, this is the first acquisition is always the hardest. So you kind of want to invest more to get that mortgage down, or just accept the negative mortgage for a while until the inflation will raise your prices up until 800. Or something else, even you could consider renting to expats, who will always pay more because it's very short term period. So 1 year contracts will also be a little bit better. Again, your risk is higher. Or you could rent it out furnished, which will also give you another 100 or 200 euros a month.
Okay, so the strategy should be different. You were talking about products, so products should be more like either short term than to have like a higher rental, for instance, if I rent to expat, or I have a down payment, which is more important also. That's a possibility.
Yeah, you have to balance the scales, and the first one, it depends. If you find something that is a great deal, then it might cash flow from the start, but otherwise you have to put in 20 or 25% of the buying price just to get a positive cash flow, which is possible.
And I was also surprised to hear you saying like the way you were explaining, like it's possible to have like negative cash flows at the beginning and then you are still able to balance it out, because I heard people saying like, oh, you should do the calculations, and if beforehand you see that you already have negative cash flow, then it's not a good investment.
I think in 90% of cases you will have a negative cash flow investment if you lend 100% of the mortgage. So it's either putting in more down payment, so the balance is better, but there's very little opportunities that will actually have a positive cash flow if you lend a lot of money. That's what I'm trying to say. So what you try to do is either pay off more in the start or add the value. If, for example, my example was to paint all the walls, just something very stupid. It's very cheap, but it could also increase my rental value by 100 euros a month. So doing something small like that, buying something that people don't really like, and turning it in something that people like, that will definitely increase the value, or at least the perceived value, so you can get more rental value as well. So if you would buy a studio apartment in Brussels, just to give an example, because I don't know the Brussels market all too well, but if you find something that has a mortgage of 700 euros because it looks a little bit dilapidated, and you put in 5,000 euros extra to make it look very nice, make it a little bit more modern, then you can get that rental price of 800 euros, and you'll have your positive cash flow. You can even get a rental value of 850 maybe.
Okay, thank you.
Pleasure.
Question from Dana. Hi, Dana.
Two, actually. Hi. So you're investing mainly in Antwerp, right? And now in terms of areas, are you choosing an area because you know it, or also kind of, how to say, try to find out if there are future investment plans in the area which will increase the price, of course? How do you choose your area?
Well, I'm 32 years of age, and I've lived 26 of those 32 in Antwerp city. So I know Antwerp by heart, at least 90% of the city. So that's an easy way. If I see on ImmoWeb, well, it's in the Hoogstraat. Well, I know perfectly where the Hoogstraat is, and I know it's a good area. So yes, it definitely helps to start investing in your own town. And most of the people that I know that have invested a lot in residential real estate, they all start basically around where they live at that present time, because it's easy. It's you also have to manage a little bit, so you just go there, and I go by bike to my apartment, so that's super easy. But in the future, there's a big chance that I will move to Brussels as well, or at least the outskirts of Brussels, Meissen, and the north of Brussels. So I'm already looking to that area as well as an investment area. I'm not sure if I'm gonna buy any apartments in the future, but I start learning about that area as well. And you learn it by looking to ImmoWeb and see what are the options and whatnot, but also by going there as well. So physically going there. If you were to buy, for example, a detached house in the suburbs for your own, not for an investment, for example, then I would always suggest going there and basically taking a chair and sitting on the street for half an hour or an hour, just to make sure that you feel good with the area, basically. So you have to learn the area. I don't think you can just invest based on numbers on the other side of Belgium without knowing the area, basically.
Okay. And the second question is, are the banks still, 100%, I know it's still possible, but what about 120%? Is that still possible? It used to be in the past, but...
I used to work for banks, but they've made it a little bit more strict. Basically, the banks have criteria. They can give out 100 loans, and 90% of those loans have to be at least 20% self-funded, so they can only give you 80% of the value. Then they have SEF, for example, that can go up to 100, and then they have a few percentages of loans that they can give out for even more than 100%. And it is possible, but most of times that is in a combination of the full acquisition price and the renovation price. So most of times they will not fund the registration fees, but if you have very low income and you're buying but you don't really have any savings, then you are quite a risk, right? So the banks will then ask you to put in a lot more money than normal just to make sure that the risk for them is very limited. But if they see, oh, that's a very big cash flow already, or he's a doctor that earns 5,000 to 6,000 net a month, and he's buying something that will only have to cost him 500 to 1,000 euros a month, well, they will throw money at them. So yes, it is possible, but you really have to show that you are not a risk for the bank, and that's sometimes a little bit hard, definitely in the beginning.
And did you, with your investments, did you ever try an anti-sman or credit bullet, I think it's called?
Yeah, the apartment I bought in 2021 is actually divided in 3 loans. So it's one apartment, 3 loans. One of them was the notary fees. It was just 5,000 to 6,000, so it was a very small one on 10 years, just a normal one. Then I had the bulk of the value of the apartment on a fixed loan of 25 years, and then I think it's 42,000 euros on a bullet loan on 10 years as well. And I asked for the bank because they're not going to propose it for themselves. But then again, I pose fairly little risk at the moment for the bank, so they were compliant with that. But that's very nice because I lend 42,000 euros. I'm only paying 43 and something every month for that, so that's very, very little. And in 10 years, well, 8 years by now, I'll have to put the 40,000 down. But due to inflation, that 42,000 will be 20,000, something like that. So it's the value is so bullets. I mean, are very interesting, but a bit hard, and especially not as a first investment, I think. But they are done. They are definitely done. Definitely a lot in professional investment, private more rare.
Yeah, I know that, for example, if you have a VAPZ, then the insurer would consider giving you a bullet credit as well.
Yes,
So
because your risk is pretty limited, because if you have a VAPZ, they will use that value of the VAPZ as an onderpand in Dutch, as a collateral for your mortgage. So yes, that is possible. And you can also, if you're further in the line and you have some properties that are paid off, you can put those into collateral as well. And then things are possible. Yes. Again, it's all risk assessment for the bank.
Well, you know, right?
But also if you have an investment portfolio, sometimes banks will give you a loan based on the investment portfolio you have. So I have had the proposition, I have not done it, but they will lend you 60 to 70% of the value of your investment portfolio without property collateral, basically, but based on your portfolio.
You have to move your portfolio there, right?
Yeah, because they will have to be able to get that. So all my investments are on Bolero, and even KBC cannot see Bolero, even though it's the same. Well, it's not the same company, but yes. And also they will always ask or prefer it that you invest in their funds, obviously, and then
pay the fees.
Pay the fees.
Put your accounts and your insurances and everything with them.
Yes, so that's not too interesting, but I guess it's an option. Some people do it, but for me, not now.
Okay, thanks. It was really interesting to hear about your experience.
Cool, nice to hear. Thank you.
Okay, we can maybe take a very last question if it's a short one. If anybody has one last burning question.
I have a question. My name is Lana. What is your experience with these banking brokers? Do you always go straight to like KBC or BNP Paribas, or you work with the subcontractors, with the brokers?
It depends. For now, KBC always gave me the best rates, but I do suggest to bank shop a lot, because definitely in the first or second acquisition you are basically tying yourself to a bank for the next 20 years, and they know that as well. So banks will have very competitive rates if you really ask them to. So for example, if you get a 3% rate at Belfius for 20 years, and you go to KBC and they say, well, we'll go lower and we'll even get the loan further, so on 25 years we'll give you 2.8, then you get that proposition from KBC, go back to Belfius or to another bank even, and they say, this is what I get, do you want me as a client or not? And even though mortgage does not per se give the bank a lot of money. It's all these extras that give them a lot of money. You have your insurance of the building, you have your death insurance for the building as well. I'm not sure what it's called in English. You have your basically your wages that get dropped in the savings account or the checking account every month. So basically, you're tying yourself to that bank, especially in the beginning. And yes, you should really go to different banks and to really fight for you basically in the start. And to go for brokers is also a good option, because if you go to Imotheker, Finotheker, they have a lot more options. And Imotheker, Finotheker back in the days suggested me to go to ING. I had not talked to ING at that point in time, and they proposed me a 120% loan, but all on bullet, which was unheard of for normal banks. But it was just the interest rates were not so interesting. But they do have a lot more options that normal banks will not give you, or do not think about giving you. So yes, it's definitely worth to go to different banks, and if you want, definitely the brokers as well, because they tend to have very good options as well. Not the best, but definitely good.
Thank you. And sorry, I do have one more question. Do you think it's realistic to get 100% on your like third, fourth loan for the apartments?
Yes, I will definitely get 100% next time.
Okay, because I got my first one with 100%, but for the second one, they were pushing back a lot. And I checked so many banks, and at the end, I went with 90%, although I really wanted 100. And I think with every time, it gets harder and harder, you know?
It depends on your cash flow. If it is ample, then it will not be a problem. It really depends case by case, but to be honest, for me, it was no problem, because my fourth apartment was 103%. So again, it's been 2 years, I guess, but no, because I'm debating on a new apartment as well. I'm building one next year maybe, and the banks already said 100% will be fine.
Which
Okay.
bank,
Because
by the way?
at the moment I'm full on KBC, but the next one might be Belfius. I'm trying to get some people to know at Belfius as well. So it's networking basically. But
Yeah.
they see the potential in the long run as well. If you have few apartments now, at a certain point in time you're gonna sell, or at least you're gonna have this rental income all the time, and that money will accumulate in your bank, and the bank wants that basically. They want to invest it. They want to earn money on it. But I think we better round up here. So if you have more questions, feel free to message me afterwards. No problem.
Thank you so much, Joris. This was amazing. Everyone that is in the audience, I would like to invite you to tell us in the chat how amazing this was and how thankful you are for Joris's time. If you could share with us what was the most interesting takeaway from this session, I will take snapshots and I will send them to Joris. It's a nice, you will see it's a nice memory. You say all of the good value you've delivered and all the takeaways from people. It's basically my way of thanking you, is getting them to thank you and then sending those to you. It's always
Awesome.
what makes me feel best, is when I see that what I did was useful. So would love to see what you guys have to say to Joris, to thank him for his time, valuable time, and also sharing a lot of his experience and numbers and a lot of advice. So I think this is, honestly, Joris, was an amazing conversation. I've learned way more than I actually expected, and I see that education in the real estate investment space is essential, because what I see most people do doesn't come nearly as close as what we discussed. We've discussed so much more today than I've ever heard from my family members talk about, right? And that's insane, because they
we
all
only
brought
gave
something.
the surface, because it's so different from Walloon area and Flanders. So
it's only the
definitely.
beginning, and we only scratched the surface, and I think there's way more to do. And so certainly, Joris, I'll invite you back if you're interested. We can talk about this again. Certainly, this is a topic that we're going to be diving in a bit deeper in the Fi Belgium community, and there's a lot more to do. Everyone, I encourage you to continue the education as well. Reach out to Joris, but educate yourself so that you can get the best deals and build your wealth, take control of your finances. Also, serve tenants, help them live good lives too. It's not just about making most money. It's also about, providing a valuable service to people who need a good service, and they all need good landlords. And so be one of those. My landlord is amazing. I love it. And I'm very happy a renter, but it's because I have a good landlord who made a good investment, and now I can benefit.
Yeah.
Happy to pay the price. It's not the cheapest, but it's a really good value place. So love it. Anyway, keep dropping the comments and the thank yous. And in the meantime, thank you so much. And I'll see you next time.
Thank you, everyone.